Hey everybody, I hope everyone is doing well and had a good day. In this video, I'm going to review the Emini 5-minute chart for Thursday, September 4th, 2025. We can see, based on the price action going into the day, I just want to look at the RTH chart today. We had a small gap, so we can infer that the Globex session was mostly sideways to up. And if we look at the context going into the day, we have this rally back here and maybe a wedge bull flag. It's a pullback, but relative to this entire rally, it's not all that deep. And you can see the strength of the bull breakout along the way up is stronger than the bear channel going back down. Bear channel, bull flag, and this breakout is strong enough for the second leg. So at a minimum, probably going to test yesterday's high. And the rally at the end of yesterday was strong enough that we're probably not done going up here. There's probably more to the upside. This breakout needs a second leg as well, and possibly we'll go for a measured move up. Fairly tight trading range on the open. Gap up, and the market accepted the gap up on bar 1. You can think about the gap as a breakout itself. So bull breakout and follow through on the open in this really strong rally. Like I said, second leg up likely. So all of this is probably a minor reversal. If we think about what we need for a major trend reversal, you're normally going to see big consecutive bear bars, a significant trendline break, so a break of a significant trend line. Usually it's going to cross the moving average, and then you're going to get a test. And then you're going to get a test of the prior high, the trend's extreme. So all of this is a trading range on the open. Most days you don't get, bar 1 does not remain the low of the day, and it's a trading range open, so the odds are we're going to at least test the low of bar 1. It's 11.5 points. The recent average daily range is about 40 points. So at this point, the opening range was about a quarter of a recent average daily range. So we know the range of the day is very likely going to expand. Based on the context, it's probably going to be to the upside. And if you read the chapter on small pullback trends, you'll see a lot of the time the opening range is a tight trading range, where the range of the opening range is a third to a quarter of the recent average daily range. So it's a small, relatively small opening range. Bar 7 is a bear breakout. Good bear bar, and second leg down likely. However, it's probably not a major reversal at this point. It hasn't damaged the bull breakout all that much. It's a tight trading range. Now we're getting a bear breakout. And we know 80% of breakouts of trading ranges fail. If we look at the recent trades taking place over here, it seems to be a fair price in this area. This is a triangle. Usually, when the market breaks out of a triangle, 50% chance it fails. Depending on the context, may even be more likely it fails, like in this kind of context, strong rally and a bear breakout. but testing support. And because of the triangle, because traders saw this as a fair value, breakouts are probably not going to go all that far before the market comes back and tests this area. So 7, it's a strong enough bar for a second leg, but because it's counter to the direction of the trend, bears are probably scalping. So breakout follow through 7 and 8, probably sellers above, maybe sell a 50% pullback. But the downside might be limited. You can see the follow through bar much smaller than bar 7. I said for a major reversal, you really want to see consecutive big bars. 7's a relatively big bar, but 8 was a much smaller follow-through bar. Now we're approaching more support. We've got yesterday's close and the moving average. So likely we have sellers above and a second leg down, but the downside is probably limited. 9 is the minimum for a second leg. We rallied, came back and tested the low close, so the bears have a couple of legs down. 9, not a very good stop order sell. It's a fairly big bar, so big risk, forcing you to sell near support, the moving average, yesterday's close, after a strong rally that still has not had a second leg. 9's a better bar to buy below than to sell below. And then 10, a reversal bar, pretty good reversal bar for the bulls. A few legs down, you could say 1 or 1, 2, 3 legs down. Slightly lower low, double bottom with yesterday's close, finding support at the moving average. And again, the rally is likely to get a second leg. So we're probably going to test the highs. We're going to probably test the apex of the triangle. So 10, if you're short for any reason, 10 is a reasonable bar to exit. If you're flat, you can buy above 10. It's one of those always in flipping bars. If we were always in short, it was for a brief period. The bears got their second leg and it's flipping back to long. So you buy above 10 to exit shorts or to go long. Then a very strong breakout bar, 11, good for the bulls. The bar closing on its high, it's a relatively big bar. Clearly a micro gap from the high of the prior bar and the close of this bar. There are trapped traders below, so we're probably going at least a little bit higher. And the bulls got follow through buying to the high. But this is still, is 13 a double top you want to sell? Bar 2 and bar 13? Of course not. It's a 4-bar micro channel. If you use Ali's 10 plus 2 strength factors to grade this micro channel, it's going to score pretty high, probably 60 or 70% chance we get a second leg. So the first reversal is likely going to be minor, probably more buyers below 13 than sellers. And it's probably okay to buy the close for at least a little more up. Another breakout bar, but now we're getting tails above bars. So on a smaller time frame, this is a parabolic wedge, 12, 13, 14, 3 pushes. So we're probably going to pull back here, but a parabolic wedge in a simple leg meaning there's no spike breaks, there's no pullbacks from 10 to 14. This is a simple leg. And then you get a parabolic wedge. You can expect a minor reversal, but that's it. You expect the minor reversal and then trend resumption. Just because there's 3 pushes does not mean there's going to be a major reversal. This breakout is strong and there's probably going to be a second leg up, similar in size and energy. So 15 expected pullback, but probably a minor reversal. We're getting that minor reversal here, similar to over here. It's a fairly tight trading range, but probably not going to lead to a major reversal, because where are the consecutive big bear bars? Where's the break of the significant trend line? It doesn't exist. So at this point, I'm thinking at some point, the bears are not gaining much traction through here. They're trapped. If you sold above 10 and scaled in, you are in a rough spot. And at some point, then that's considered the pain trade for the bears. And at a certain point, the bears are going to have to cover and give up, and that can lead to another bull breakout. 19, it's a weak second reversal, implied second reversal. You've got a low 2, low 3, 15, 17, 19, doji signal bar. So contextually, not very good for selling. The signal bar, it's a doji, which is a 1 bar trading range. With the trading range, you want to buy low, sell high. It's probably buyers below 19. 21, testing, lower but testing. Support, low in this tight trading range. Still probably all minor reversal. This is, I learned from Ali, this is a fat area. So you have, and it's not, maybe I can find a quick example. Maybe not. I don't want to go too far looking for it. But when I like the example of the bull trend where you have this strong burst of energy and then you have a triangle bull flag, and the pullback is so strong that it doesn't even go sideways to down. It just continues up in a channel. And I'm not seeing a great example for either side. Even here, not exactly what I'm looking for. Range expansion, range compression, fat area, range expansion again. So expansion, contraction, expansion. That's what I'm looking at today. That's what I'm looking at this as. You have expansion, contraction, and then the expectation is expansion in the direction of the trend again. So 22 might be that give up bar. It's possible you can count 3 pushes up, but it's a minor wedge. The selling pressure is really weak. And for a minor wedge, you expect a minor reversal at best and possibly a measured move up. So in this case, breakout bar 22 with follow through, another 3 or 4 bar micro channel. The odds are there are buyers below, another leg up likely. Minor reversal, resumption. You can see the market tested that measured move target and had a reaction. But even bar 30 is probably a minor reversal. It's a good looking bar, but the selling pressure is not very strong. Open gaps all through here, open gaps here, open gap here. So the bar itself looks good, but it's not especially big. And again, where's the trendline break? Where's the consecutive big bars? They don't exist. So this is more of a tight channel, and 30's testing support. It's testing near the trend line. So not very good for selling. 80% of reversal attempts in a trend fail. Getting another leg down, so 30, leg 1, pullback, second leg down to 36, but testing the moving average for the first time in about 20 bars. You can call it a double bottom bull flag with 26. And there's a pullback above 34, so breakout follow through 35, 36, but the context not very good. It's leg 2 here, 1, 2, and also a bigger high 2. So high 1 here, high 2 here. So 36 to me is more of a place to look to buy. Now 35, 36 may need a small second leg, the way that 7 and 8 needed a second leg. So it's aggressive to buy here, but it's probably better to buy than to look to sell because the momentum is so strong that this is still probably a minor reversal. We're testing support, so not an ideal place to be selling. The bear is getting bad follow through, maybe a bare minimum second leg down, breakout, pause. Maybe they get one more bar, and 39 is that minimum second leg to a new low, but probably buyers below 36 on 39. So even though the signal bar is not great, it is a buy signal bar, 39 closing above its midpoint, similar to bar 10. If you're short for any reason, you probably want to exit shorts above 39, and it's reasonable to buy to go long above 39. Double bottom bull flag. You can see a big breakout bar. So probably buy the close, buy a pullback on 40, bull breakout in the direction of the trend. 42, sell vacuum, but probably testing support. The bad signal bar, 39 high, getting tested. The low of 40 getting tested. 42 is a good looking bar, but the context similar to this, not very good. Now it might be 1, 2, 3 legs down against the trend. So 42 needs follow through. Traders will buy, betting that they will not get follow through, and they'll fade the bar. So rather than sell the close, you buy the close, put a stop and measure move down, and target the high of the bar. So that's what happened on 43. So another breakout in the direction of the trend. You can pretty much ignore the leg count in the direction of the trend. I know you can count 3 pushes up, but just like back here, you could have counted 3 pushes up and it led to higher prices. Leg counting is for minor reversals. So in a trend, you want to count the legs against the trend, but not necessarily the legs with the trend. It's not entirely true. Like, you don't want to exactly totally ignore leg count, because you do expect channels to correct, and you have 3 pushes up here. We got a couple of legs sideways to down. So it's not ideal to be buying at the high of a channel in a third leg. But you can see if you did buy here and used the appropriate stop below 21, the swing stop, the theoretical correct stop placement below 21, and you bought up here and you didn't panic and you bought more lower, you're still testing the highs and you're still going to make money. Breakout follow through to a new high, 44, a weak sell signal, probably buyers below. More trend resumption, 48. Again, you can count 3 legs, but it's a minor wedge, probably buyers below. Another leg up, likely. Another give up bar, 53. And the leg count just keeps getting reset in a trend. That's why you can pretty much ignore leg count in the direction of the trend. Maybe a little climactic. You expect a pullback, but not a major reversal. So it's okay to buy, or maybe wait and buy lower, buy a pullback. But either way, buying and buying a pullback, reasonable thing to do. 58, a weak reversal attempt. Again, you can maybe count a wedge, but very weak signal. It's kind of like bar 19 back here, a doji signal bar. The channel up is tight, more likely buyers below 58. 3-bar micro channel, but context, it's a double bottom, kind of like back here. So breakout follow through, bear bar closing on its low with follow through, but look to the left, you're testing support in a bull trend. 3-bar micro channel, but look to the left, you're testing support in a bull trend. So another similar situation to back here. And then outside up, 61, reasonable to buy and buy a pullback. Bears getting their second leg, 63 in this area. Better to look to buy. So the downside here is probably limited. Another weak sell signal, 65, buyers below. Another give up bar, 69. But similar to 53, we might pull back first. So maybe buying the close is not ideal, but buying a pullback is reasonable. Maybe we test the breakout point, bar 68 high, 72. After a buy climax, but in the direction of the trend, a couple legs down, 72. Probably a buy the close bar. And then they get bad follow through, and then a give up reverses. Channel phase, sellers at the high, so bulls take profits here on 75, but this is still a minor reversal. 75 is a weak sell signal. Now, bar 75 at this point, this is all in theory. I would not be trading this late in the day, but strictly talking about price action, in theory, if you are trading, 75 better to buy below. 76 probably a buy the close bar, and then buy climax. Now getting very late in the day, and then a rally into the close. Alright, that's going to be it for today's end of day review. Thanks everybody for watching and listening. and I hope everybody has a great night.